Welcome back to iAnalysis 1. We are giving away $100 to a random subscriber who comments on the video that gets us to our goal of 100 subscribers, so make sure you leave a comment. Intel's future a high-risk investment or a turnaround opportunity? Intel, the tech giant that once dominated the semiconductor industry, is now facing one of the most challenging periods in its history. With declining revenues, intense competition from AMD and Nvidia, and a risky turnaround strategy, investors are asking, is Intel a high-risk bet with massive potential or a fading giant struggling to stay relevant? Let's break down Intel's current state, its financial struggles, competitive position, and what the next 12 months could mean for this tech titan. Intel's recent financial performance paints a mixed picture. In Q3 2024, Intel's revenue fell to $13.3 billion, down 6% year-over-year. But the real shock, a $16.6 billion net loss, yes, billion due to restructuring costs and asset write-downs. Gross margins plummeted from over 40% last year to just 15%, reflecting Intel's costly efforts to cut expenses and retool its manufacturing. Then came Q4 2024, showing slight improvement. Revenue ticked up to $14.3 billion, and losses shrank to just $126 million, essentially break-even. But full-year revenue was still down 2% at $53.1 billion. The company's once stable profit margins have taken a major hit. Looking ahead to Q1 2025, Intel's own guidance isn't inspiring confidence. The company expects revenue between $11.7 billion and $12.7 billion, below analyst expectations. The bottom line, Intel's turnaround is happening, but it's slow and painful. Intel isn't just fighting internal struggles, it's losing ground to fierce rivals. Let's start with AMD. Once considered the underdog, AMD has skyrocketed in market share. By Q3 2024, AMD controlled nearly 29% of the desktop CPU market, its highest share in 15 years. In server CPUs, AMD captured 24% of total units and a staggering 34% of revenue, a direct challenge to Intel's dominance in data centers. AMD's chips built on TSMC's cutting-edge process nodes offer superior efficiency and performance in many cases. And then there's Nvidia, the undisputed king of AI chips. Nvidia's revenue more than doubled last year, hitting a jaw-dropping $60.9 billion, surpassing Intel for the first time in history. Thanks to skyrocketing demand for AI processors, Nvidia enjoys massive 70 to 75% gross margins, dwarfing Intel's. While Intel is playing defense, AMD and Nvidia are charging ahead with growth and innovation. So what's Intel doing to fight back? Intel has initiated a $10 billion cost reduction plan, which includes layoffs and operational streamlining. The goal: improve efficiency and free up cash for critical investments. Intel is pushing into AI with its Gaudi AI accelerators, but these are still in their infancy compared to Nvidia's GPUs. Intel is also betting big on Foundry Services, manufacturing chips for other companies. If Intel can secure major foundry customers, it could become a serious rival to TSMC. The company is launching new PC and server CPUs in 2025, including Meteor Lake and Arrow Lake for consumers, and Granite Rapids and Sierra Forest for data centers. These need to be game changers if Intel wants to regain its competitive edge. Intel has one big advantage that AMD and Nvidia don't: government backing. Thanks to the CHIPS Act, Intel is receiving nearly $8 billion in funding to expand its U.S. manufacturing. Additional subsidies from the EU and Germany are also helping finance new factories. This reduces costs for Intel and positions it as a leader in domestic chip production. However, trade policies and export restrictions, especially regarding China, pose risks. Intel still relies on global supply chains, and U.S.-China tensions could impact its sales and partnerships. Now, the million-dollar question: is Intel stock a good investment? Analysts have a 12-month price target of around $23 to $25 per share, implying minimal upside from current levels. Some bullish analysts see potential for 30+, but others warn the stock could drop to 18 if Intel's struggles continue. On paper, Intel looks cheap, trading at a forward PE of 12.6 times compared to AMD's 17.6 times and Nvidia's sky-high multiples. But this low valuation reflects the uncertainty around Intel's future. The bottom line: If you're a high-risk investor, Intel could be a speculative buy, a turnaround play that could pay off. For most investors, Intel is a hold, wait and see if it can execute its strategy. If execution stumbles or competition intensifies, further declines are possible. So, what do you think? Will Intel pull off a miraculous comeback, or is it destined to fall behind AMD and Nvidia for good? Let us know in the comments. And don't forget to like, subscribe, and hit the bell icon for more insights into the world of tech and investing. Thanks for watching. Don't forget to like, subscribe, and leave a comment for a chance to win a nice, crisp $100 bill.